You guys have been long, very vocal, very bullish on the fundamentals of Tesla for a long time. But it's interesting thinking about them in the context of the stress on the grid, because electrification of the auto fleet is, in theory, going to put a lot more demand on our electrical grids. Do you worry about that? Is that a upcoming stress point? Texas, California, everywhere, this sort of degree of demand that we're going to be placing on the grid as more cars go electric?
In short, no. So we've done work to look at energy demand that will be kind of elicited by electric vehicles. We think that 40 million electric vehicles are going to be sold by 2025. And so there's going to be a lot more electric vehicles entering the marketplace. But because of the even daily fluctuation in power price, where in the middle of the day when everybody's running their air conditioners, or in this case in Texas in the middle of the night when everybody wishes they could be running their heaters, you end up with a higher demand than you do at other times during the day. And so what typically it's middle of the day is higher demand, and at night is lower demand. And so at night when electric vehicles are plugged into the grid, pulling power out of the grid is typically a slack time in demand. And so you actually don't need to introduce a lot of additional capacity to keep the electric vehicle fleet filled and operational. And in fact, because you're flattening the volatility that is otherwise in the energy demand cycle, you can end up with a net lower cost of energy, because a baseload power that's operating at very high utilization rates, you can basically you can levelize cost that power at a lower level than a plant that is only supposed to operate a few hours a day. And that's exactly the energy arbitrage opportunity that a battery storage system also seeks to address. So you can think of the electric vehicle fleet as just like a very big distributed battery system that will be taking power out of the grid at night when otherwise you don't have a lot of demand, and then giving power back to running down those batteries during the day when you have a lot of additional demand from air conditioning, et cetera.
When do we start to see a more expansion of those energy storage options beyond, of course, whatever car you have parked in your driveway?
Well, you can buy from Tesla and from others today a battery system for your home, and typically that's spec'd for a certain number of hours, basically as both a replacement for buying a generator. Potentially you have charged up the battery and you lose power, and it kicks in and keeps you operating whatever you need to operate for some number of hours. One of the convenience factors there is oftentimes power outages are not multi-day power outages like what's being experienced in Texas, but it's a couple of hours or it's a half day. And there the battery system is the perfect kind of sweet spot to you won't even notice that the power is out in your particular neighborhood, because you just fail over into the battery system that, if paired with solar, you've filled up relatively inexpensively over time. And so you can buy those today. I think as you have more of those batteries get installed in homes, there's the potential for utilities to be able to draw on that resource in times of emergency. So I know there's a utility in Vermont, I believe, that's actually subsidizing purchase of home batteries with the agreement that then they can pull on that power when they need it from the homeowner. And so it's a way to, in some ways, decentralize the power grid, where you have more power distributed at the endpoints that then you can call upon when there is essentially a demand crisis or supply-demand crisis.
Brett, this crisis that we're seeing at the moment, you obviously invest across 5 disruptive technologies at certain inflection points. Is this going to be the inflection point turning into a complete new demand? Because are we going to see new companies being born out of this crisis moment? Do you think that this is just Tesla's ripe for the picking, or are we going to see many new companies born out of this moment?
I mean, I think you'll see a number of new companies, and apologies for my video, but I think you'll see. You'll certainly see interest from the consumer's perspective in de-risking against this kind of possibility, and I think it's unclear to what degree the renewable energy space and the battery space itself is an interesting space from an ultimate cash flow generation perspective. Tesla has a competitive advantage because they need to generate battery cells for their electric vehicle manufacturer anyway, and vehicle sales is a naturally kind of not supplied constant curve. And so to keep their battery manufacturing factory fully utilized, they need to fill in other places where they can sell batteries.
Right.
Whereas somebody who's going directly after the energy, and so Tesla should be able to price batteries more competitively than somebody who is only going after the renewable energy battery opportunity itself. But it remains to be seen. There's a lot of players in the space. It's really hard to convince a customer to spend thousands of dollars on something they don't need immediately. And so kind of trying to protect them against some future event, that's a hard sale. This kind of crisis in Texas can catalyze a lot of interest and will probably lead to additional installs both of solar and batteries into people's homes.
You know, it's a phenomenon, ARK. You, director of research. The big question is, what does it mean that you guys are so big? And I think last time Bloomberg looked, over 25 companies, or at least 25 companies, in which you own at least 10% of the equity. How does that change the fundamental challenge for you now that you're not just a price taker, but in many ways a price setter, especially for some of the smaller names that you invest in?
Well, if you look across the 5 disruptive technology platforms that we invest in, we believe that there's roughly $14 trillion in attributable market cap. So that's on AI, energy storage, gene sequencing and editing, robotics, and then cryptocurrency and blockchain. So some of that's not market cap, some of that's Bitcoin. But we believe there's $14 trillion attributable. And we actually think that's going to grow quite significantly over the next 5 years. And in our modeling, which we obviously could be wrong, we think it's going to roughly double to almost $30 trillion. And so for us, in the way that we look at the portfolio, we don't lack for opportunities in which to deploy the capital that we have. Another kind of aspect of the way that we actively manage the portfolios is we take a long-term view of valuation. So kind of within that rough doubling that we believe is going to accrue to these fundamental technologies, these disruptive technology platforms, there's probably going to be a lot of volatility along the way. In fact, I'd say it's almost a certainty. And that volatility could be down or it could be up. And if you look from our perspective, historically, our 5-year price targets, which we have for all of our positions, actually aren't nearly as volatile as the market's volatility. So we tend to trade counter to market movements in the interim. A stock trades up on earnings, we tend to sell it down. If it trades down on earnings, we tend to buy it, because often that earnings event doesn't affect the way that we think that the company is going to look 5 years from now.
As you've just done with Palantir, for example. And it's interesting, 14 trillion divided by how many companies do you think, and how many would you get into? Because it's interesting how you toggle between, like, on the low end, just above 20, on the high end, just above 50 in terms of how many names you own. Do you think as that 14 trillion opportunity gets bigger and bigger, you will just add more and more names?
It depends on the cycle. So if you look historically, the way we've managed the portfolios is the number of names has concentrated when our style is more out of favor, and then tended to grow when we've diversified the holding base as people suddenly believe that we know what's going to happen in the future. And so again, like, we have I think generally, even Joe talking about how well known and famous we are, that begins to suggest to me that a lot of people are focusing on the same kinds of things that we're focusing on. And so we are more cautious in some of our positioning. And then as we fall out of favor, which inevitably we will, then likely the portfolio will concentrate to some degree. That said, there is a lot of kind of incremental business creation in the spaces that we're focused upon. If you rewound the clock 5 years ago and asked people about the basically enterprise software space and the software as a service space, there is no way that somebody would correctly predict the number of valuable names that would be, very liquid and really interesting businesses addressing that opportunity. And we think that's going to play out across the technology platforms that we're invested in.